Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, August the 15th. My name's Eric Wilkinson. Yes, you may recognize me as the Wolfman from mainstream media, but what I'm actually here to do is teach you how to trade options and how to implement those options into your portfolios. But please remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. We actually have quite a bit today. You know, everybody's talking about the doom and gloom, but I think that we get a pretty darn good picture of how the economy is doing today. I've been talking about it in the past. We have been doing just fine here in the United States. So without further ado, let's get on with the economic data. Across the pond, let's start out with Great Britain's retail sales coming in at 0.2%, expected to be a negative 0.3%. They did revise last month's number down by 0.1% as well. But not enough to make up for that beat there. Now we're already back over to the United States, and we got core retail sales coming in at 1%, expected to be 0.4%. They did revise last month's number down 0.1% as well. Now remember, core retail sales excludes some of the more volatile aspects of that number. It excludes autos and I believe airlines and stuff, or just autos. All right, anyway, Philly Fed comes in at 16.8%, expected to be 10, or 16.8, expected to be 10, no revisions to the previous number. Retail sales here in the United States, that puts back in the autos, did very well as also. It came in at 0.7, expected to be 0.3. Another revision, though, to the backside, our last month's number down by 0.1%. Empire State Manufacturing Index coming in at 4.8, expected to be 2.1. Better is good. Preliminary non-farm payrolls coming in at 2.3%, expected to be 1.4%, so that's not very good. That's one of the first ones we've seen that's not great. We'd like to see that number downtick a little bit. That's preliminary non-farm productivity. Then we got unemployment claims coming in at 220,000, expected to be 212. That's a little bit higher than we'd like to see. But, you know, with a good economy and people see that the economy is doing well, people are getting hired, hearing their friends getting hired, they are going to start looking for a job if they were off of the job market. Maybe they were discouraged workers. That's what we're seeing a lot of right now, is those people that weren't able to have a steady job kind of falling off of the unemployment. They stop claiming unemployment and they become a discouraged worker. So they don't show up in as being unemployed or show up in the in any of the employment numbers really. But when they come back and start looking, they actually come back into it and looks like they are looking for a job again, and those claims start increasing again. All right, capacity utilization coming in at 77.3, not much of a miss there. Industrial production, negative 0.2%. We don't like to see that. Expected to be a positive 0.1. They did revise last month's number up by 0.2%, so not quite enough to make up for that headline number miss, but it is still pretty good. Makes it come in line almost. Business inventories came off a little bit. It was unchanged, expected to increase by 0.1%. Remember, we'd like to see these inventories go down. That shows that they are moving that inventory. And then National Association of Home Builders Housing Market Index came in line with expectations at 66. And finally, natural gas storages had a 49 billion cubic feet build, expected to be 60 billion. All right. Now let's get on with the overall markets. We've got crude oil off just a little bit. We traded up to that 55 handle earlier this morning. We're starting to lose a little bit of that, but we also this morning came down and kissed the point of control, which is what we're talking about. You know, crude oil is looking pretty bearish here to the downside, but I think it's more a product of we're going to kind of hang out here around these mid 50s to, you know, mid to lower 50s, I should say. All right, gold futures pressing up against our Fibonacci extension here. That lined up very well the last few times. That is acting as a major resistance area on the upside. You know, it is a flight to safety with everybody talking doom and gloom in the markets. I don't see it, to be quite honest. We got the bonds up 0.5%. I don't know what's going on with my marbles in my mouth. My brain is not firing on all cylinders. I'm sorry, you guys. Up up 16 ticks. All right, there we go. But it is looking a bit toppy here with the bonds. Friday we get a confirmation to the downside that will be making sure that we did see a top there for at least the near term. VIX relatively unchanged for the most part, because the bond or for equities are really struggling to come up with a discernible direction. You can see the Dow Jones Industrial Average is up 20 points on the day, a little bit lower than where we opened. NASDAQ, this kind of chart setup is actually making me a little bit leery of my position that I have going on here with the bonds. Bonds I'm looking to be short. I am short the bonds and long the equities. That's not really working out lately, as you can tell. But this market right now, when we get a setup like this, if it were to end where we are right now, this setup right here, or that candle right there, that green candle that we're getting today, that looks like it is a pause and ready for a continuation down. So I would like to see a move higher. Actually, even if this just stayed right here, it's not going to look good. It's going to look like we're going to be setting up for something with a candle that goes like this. Obviously, that's that continuation. We can see those happen quite often throughout the charts there. So that kind of candle, when it's like middle of the road, usually indicates it's going to continue in the trajectory it's going. So if it was in an upward trajectory, it would be a bullish sign. If it's on the downward trajectory, which we are, it is a bearish sign. So that candle today is making me a little bit nervous as to my position. Basically, if tomorrow, if today we finish down here around the bottom here, I am probably going to be pulling the ripcord on my position. And tomorrow, if I start getting a break below today's current low there, I'm going to be looking to get out as well. And then we move over to the E-mini S&Ps. Similar situation. These charts are all starting to look very similar, aren't they? We got the Dow Jones where it looks like it's taking a pause. The NASDAQ, same type of setup, looking to take a pause here again, looking to take a pause. We finish towards the highs of the day. That's not going to look the same. It's going to look a little bit more bullish. But at this point, at or near where we are right now is not going to make the chart look very good. All right, let's get on to the mini S&Ps and break down to the 30-minute segments. Each candle is a 30-minute. Each blue section here is the day session, the entire day session. I can probably pull it over here and highlight the extended hours there so we can see that this is the overnight. Relatively flat. You can see it started to get a little bit short, but they flushed themselves out of those weak hands. So we're going to say that it was relatively flat coming into today and no discernible direction at this point, to be quite honest. It's an inside day and volumes kind of sloughing off a little bit as we go throughout. And that's about it. I haven't added anything because my position is very directional. I might be looking at NVIDIA today for earnings, but I didn't do like Walmart had earnings yesterday. I thought about doing it, but with the way that the markets were acting, I wanted to kind of see how some of these retailers are doing. Walmart actually did very good on they beat on their earnings. So if I'm going to talk about it this much, we might as well go take a look at it. So Walmart, we can see spiked off to the upside. I think a lot of people were expecting retailers not to do so good. As a matter of fact, they've been leading the charge to the downside recently, despite the fact that I think that they look like they're doing pretty good. You can see here that they beat on their earnings for earnings per share there, and we got a nice big move to the upside. So to me, that's saying the consumer is still out there buying. The consumer isn't really waning on their outlook on the economy. They're not worried about job security and things of that nature at this point anyway. All right, so today we're getting a webinar off on the long straddle. So we've been getting these big outside moves. I think it's going to continue as all of these levers and pulleys of the economies are coming to fruition. China's still over there in the in the weeds, in a sense, or in the shadows. So there are going to be a big market driver. So if anything happens with them, we could go either way. We just don't know. So this is going to be a good time to set up with the long straddle if you expect a big outside paced move in, let's say, E-mini S&Ps, SPOOs, Walmart, or something like that. Okay, any stock, future, or anything of that nature, ETF. All right, so check it out. I know somebody can teach you how to do the long straddle. It's not too hard, right? We're just buying the at the monies. But what they aren't going to do is teach you how to implement it in order to increase your probabilities of success, and that's what I do, all right? So I'll try and get my stuff together before that comes on so I'm not misspeaking throughout it. But thank you for bearing with me, and hope to see you this afternoon in the webinar. So if you can't take that, take it easy.